Hi guys, my name is Pete and this is Trading Kitchen. Welcome to this new video. Let's do some Monday overview. Looking for some good opportunities to trade for a long-term perspective on US indices and DAX as well. So let's first start on S&P, and as you can see, we are on a daily time frame. So after a very strong bullish movement, we are in a clear bearish trend and the bearish momentum as well. As you can easily see, comparing this to boxes in which for the same amount of space of market, uh, this is such a pretty smaller box covering the same area. So it means that the momentum is very strong, and yeah. So this was the last buyer dominance that we do have, that is being broken first here, then here, but now these are sellers that are taking control of the market. Okay, so the first trade that I probably suggest is waiting for a retest, okay, and going down, retest of this dominance. I do prefer to let the range to be clear, to be finished, okay, and waiting for a retest on the 75 of the same range. So more or less here, but obviously wait for the range for this swing to be finished. Stop loss will be just few pips above this high, but be careful that here we have one, two, three, four highs that push the same area. So means that here there is a lot of liquidity to grab. So this trade will be the aggressive one. The second one could be, so the more conservative is this one. So price going to retest this supply zone, okay, and this inefficiency, okay, and stop loss just a few pips above this high, okay. And I suppose the price will probably going to retest here, maybe get some liquidity with a spike here, going down, going to retest, and then going down, okay. I see in the last month that after liquidity grabbing, price will not going to retest the same area. So if it does, you can enter. So imagine that price is going to make a pattern liquidity grabbing here. Okay, so like this. If price will not going to retest, you can enter with on the breakout of this structure. So this could be this trade with a stop loss just a few pips above the high of the manipulation. And what about target ID? I don't see anything that can drastically stop this market, to be honest. And this was the last seller dominance that we do have, that is being broken with this volume zone, okay. That is quite before this liquidity, dynamic liquidity. So yeah, this could be a very good target. And as you can see, for the first trade, we do have a 6.5 risk reward ratio trade, and the second one, if you use a breakout strategy, breakout trigger 5.74, or if you use a pending order on the inefficiency, it's 1.9 risk reward trade, which is very, very good. Okay. Let's take a look to Nasdaq, and yeah, more or less the environment is the same. So here could be the first target in which we do have liquidity here as well. Okay, all this is all dynamic liquidity. So this is the last dominance, and so basically this is our target. Okay, this is the dominance that now is taking control of the market. So the target, the trade will be this one, and is a very good risk reward. We have 3.7, 3.4 for risk reward. Okay, same thing for more conservative trade. If you suppose the price will going here and going to take this profit. Okay, what about DAX? Okay, so DAX also here more or less is the same. Here we do have the first target, and on my opinion, this could be a very nice zone. Okay, so the target. So now the dominance is this one, okay, because we do not broke any support right by now. Obviously, this could be the first target. Okay, so if you want to take a partial, this could be good, but now this is the zone that we have to keep in mind. I suppose the price will going to retest this zone and then finally go here. Obviously, here you can wait for the same manipulation pattern. Okay, also here. So the trade could be the first one is this one with a risk reward 7. The second one could be on the breakout with risk reward 3.5. Okay, guys, that's pretty much it. There is nothing to see more. Hope you do like this video. Let me know what you think using the comment section below, and see you in the next video. Thank you, guys. Bye.